Ladies and gentlemen, welcome back to the channel. We're going to go ahead and get into everything that's going to be happening this week. This week is going to be a big one as far as economic data. We actually hear from Fed Jerome Powell as well after he took a big dookie duke on the markets last week. What can we expect and what do you need to know? Now, we're also going to talk about AMC Stock, obviously. We're going to look at the charts. We're going to look at the data. What could happen to AMC? That's a big question that hopefully will be answered here in this video. Now, obviously, we're not fortune tellers, so we don't know exactly what's going to happen. I mean, nobody ultimately does. If we did, well, we would have waited to buy until now, because the stock has gotten absolutely decimated. Now, good news is I don't expect the selling to continue. But can we expect upside is the biggest question. Let's go ahead and get into all of this information. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. I hope you guys are having a beautiful Sunday and you are ready for tomorrow. If you are not, you better get ready or you better click off of this video right now. Go out there, do what you need to do to get ready for tomorrow before you watch this video. So, first things first, guys. We're going to run through what's going to be happening this week on the economic calendar. Now, I love new weeks, new opportunity, and there's going to be quite a bit of data this week that could move the markets. It's not a huge week, but it's a big week. So on Monday, you're not going to get much. Okay, you're going to get some Fed speakers, you're going to get some data, some bond auctions out of different countries. Nothing too crazy. Now, at 6 p.m., you're going to get Fed Kashkari that speaks, and at 10:30 p.m., you're going to get the Dallas Fed Manufacturing Index. You're expecting -10. That's it for Monday. Tuesday, you're going to get the S&P Case-Shiller Home Price year-over-year, month-over-month, House Price Index year-over-year, month-over-month, CB Consumer Confidence, new home sales month-over-month, and new home sales just period for the month of August. That data comes out at 10 o'clock in the morning. You're also going to get the Richmond Fed Manufacturing Shipments Index, Richmond Fed Services Index, Richmond Fed Manufacturing Index, and basically across the board, you're expecting things to have gotten a little bit better. The Richmond Fed Manufacturing, that's expected at -5. Manufacturing shipments expected at -5. Richmond Fed Services Index expected around 7. And your Richmond Fed Manufacturing Index expected around -6. So slight improvements from last month's number. Now, at 1:30 p.m., Eastern Standard Time, you're going to get Fed Bowman that speaks, and this is one of the Fed speakers on Friday that helped cause that end of the day drop that we've seen. She basically said, like, hey, rates are going to have to stay higher for longer, and we might have to raise rates again. The Fed's completely delusional. They are off their rocker. They have lost their marbles. They are way too focused on getting inflation down. They are saying to heck with the economy. We don't care about a recession. That's literally what the Fed is saying. Now, a big question will be when Fed Jerome Powell gives us a speech later on throughout this week, do they backtrack on any of that? Do they try to change any of the prior statements they made? We'll have to see, and we'll talk about it a little bit more. Now, Wednesday, you're going to get the first round of major economic data that will be very important to the markets, that could have a big impact on the markets. And it is durable goods orders month over month for the month of August. You're expecting -1.4%. Now, last month you were actually -5.2%, so it's kind of crazy to me that GDP estimates are around 3% when last month's durable goods orders for July was so negative. Like, that does not look good, okay? But we'll have to wait and see how this number comes out, how markets react to it. Looks like you're going to get some bond auctions out of Japan, as well as foreign bond investments coming out at 7:50 p.m. on Wednesday. Now, on Thursday, you are going to get, let's go ahead and see, at 8 a.m. in the morning, the German inflation rate. At 8:30 in the morning, the GDP growth rate quarter over quarter, the final number for Q2. You're actually expecting Q2 GDP numbers to be 2.2%. The last estimate we had was around 2%. So you're actually expecting the estimates to go up quite a bit, which I do find pretty interesting. You're also going to get initial jobless claims for the week of September 2nd. You're expecting 217,000, which is right around that 4-week moving average as is. So if those initial jobless claims go up, that's obviously negative because your initial jobless claims are more kind of real-time numbers, whereas some of your non-farm payroll reports or things of that nature are lagged. This is actually more of a current gauge of how the labor market is doing, and you really need to see that go 300,000, maybe even higher than that, before the Fed potentially changes some of their verbiage that we got on the last FOMC press conference. Now, at 9 a.m. on Thursday, you're going to hear from Fed Goolsbee. And any of these Fed speakers will be very important because they might change something. They might give us new information. After all, it's pretty clear if you look on CNBC, you watch any kind of financial news, people are basically saying exactly what we've been saying for a while now. The Fed is asleep at the wheel. They should have been talking about cutting rates by now. The economic data does not look good. If you guys take a look at this article that went to CNBC here over this weekend, it says, the credit card losses are rising at the fastest pace since the great financial crisis. Goldman Sachs predicts credit card losses will continue to climb through the end of 2024 and early 2025. What is unusual is that losses are accelerating outside of an economic downturn, the firm said. Credit card losses currently stand at 3.63%, up 1.5 percentage points from the bottom. So you've doubled up essentially from where we were at the bottom. So it's not great. They do go on to say that Capital One is the most exposed, and then Discover is right behind Capital One. So not great. Now, we're also going to get pending home sales month over month, pending home sales year over year, Kansas Fed Manufacturing Index, Kansas Fed Composite Index, as well as some bond auctions that do come out in between 10:30 and 11 a.m. on Thursday as well. You're also going to get Fed Cook that speaks at 1 p.m. and then Fed Chair Powell that speaks at 4 p.m. So this will be actually after the markets are closed. And if he says anything that is different, that's what you guys need to keep in mind. Anything different can move the markets big time, right? So that's going to be very important. And I do think to some degree Fed Powell is going to want to roll back some of the comments that they made on the last FOMC press conference, and basically the way that they said, like, it doesn't even matter essentially what inflation comes out as. We need to see the economy not growing. We need to see the economy not doing well, or we're going to keep rates high. We're not going to cut rates. That's what they need to really kill inflation. And that's not great. Now, on Friday, you're going to get the inflation rate out of France. That comes out at about 3 a.m. Eastern Standard Time. And then you get the inflation rate out of the Eurozone year over year and month over month. But here in the U.S., 8:30 a.m., you're going to get personal spending month over month. You're expecting 0.5%. Last month's reading was 0.8%. So you're expecting a slowdown for personal spending. Personal income month over month is expected at 0.4%. Last month's reading was 0.2%. So a rise in personal income. And core PCE, you're expecting that to come in at 0.2%. Last month's reading was also 0.2%. PC price index on a headline basis month over month, you're expecting that at 0.5%. Last month's reading was 0.2%. Largely, this is correlated to energy. Now, PCE price index year over year, you are expecting that at 3.5%. Last month's reading was 3.3%. So not great inflation data you're expecting here this week. But again, I don't really think it matters because of what the Fed said. Like, ultimately, the markets care about a recession more than anything. Right? If the economy was doing fine, everything was good, well, if inflation went down theoretically to 2% or less and the Fed was able to cut rates, that's fine. Like, or or if interest rates went to 10%, but company earnings were 20%, I mean, what would it matter if interest rates were 10%? It wouldn't be that big of a deal if companies were continuing to grow at massive clips. That's not happening right now. Most of your big companies are negative year over year, and if they're not, they're pretty dang close to negative. So that brings up the problem here. Companies are already not doing well now. You're heading into a recession. It's very clear. The path ahead just does not look very promising for the markets. And that's the dilemma that the markets have been faced with over the last couple of trading days now. You went from not pricing in a recession at all ever since May, really rallying from 415, 420 on the S&P to a high of about 460. You basically completely unpriced a recession, whereas during September, October of 2022, you were fully priced. You had fully priced in a recession at these lows, like a pretty moderate recession. I wouldn't say a huge recession was priced in, but at least some degree of a recession was definitely priced in September and October. Now you're just in the early innings of repricing in that recession, repricing multiples and what could happen to stocks. So I don't think that downside is over. I think it's likely going to take quite a bit more downside to get you to maybe even 50% the way to fully pricing in a recession. Now, the good news is if you're an investor in AMC stock, AMC has already fallen a lot. AMC stock is not priced for great things, so there's not high expectations. And I do think the way that AMC stock has really been holding up over the past couple of days, whereas the broader markets have been selling off big time, you're showing this. Now, the low is probably in at $7.05 per share. If it's not, and you break under $7.05 per share, you're likely at that point seeing some very big downside in the markets. I think it's going to take something huge, like a multiple 2-3%, drop days on the S&P and the Nasdaq to actually get AMC to break through the lows. Just again, because you have priced in so much bad with AMC, the risk to reward looks very, very good considering where we are at right now. Now, if you look at some of the Ortex data here, you have a short score of 68, $190.11 million worth of short positions currently on AMC stock. Estimated short interest of free float at 12.48%. Free float out of loan at 13.11%. Shares out of loan about 26 million. Days to cover 1.96. Cost to borrow 6.34. Utilization of 59.46. So, interesting data here. You are seeing the amount of shares increasing. The overall short interest of free float has been decreasing, and you know why that is. Why is that happening? Well, AMC just raised a lot of shares. They just increased the float quite a bit. So even though you're seeing the most amount of shares that have ever been sold short in AMC, the amount of shares just increased as well. So it looks like the short interest dropped. And in all reality, you are very squeezable right now. And I think a lot of people have failed to kind of remember that. Now, if you take a look at the option activity for this week, keep in mind this is historically the worst week of any year for the markets. The last week of September is especially bad because your fiscal year ends the last trading day in September. It starts on October 1st. So what do hedge funds do? They sell stock, they book profits for their fiscal year, and they take a look at 2024 and they say, hey, what's 2024 going to look like? If 2024 does not look like a rosy, great year, well, don't be surprised if you see a lot of hedging next week. And that could help bring the markets down. Now, if you look at the option activity for next week, September 29th, you got about 4,800 calls currently in the money, 81,000 calls out the money, puts in the money of 15,000, puts out the money at about 31,000. So a lot more call activity than you are actually seeing put activity. So that is something different, something that can be looked at or should be looked at as pretty encouraging if you are an investor in AMC stock. But again, just to take a look at the technicals, you do have the MACD in positive territory. Well, positive. It's short-term positive, meaning the last couple of days, you've really seen some momentum building for an upside move in AMC stock. You're not even close to actually positive on the MACD, but this is better than it's bad, okay? And again, you've been in this bottoming process. AMC stock has been holding up well, even though the broader markets have been getting absolutely destroyed. That is a great sign as well. Just seeing a bottoming formation is really great news, right? And I personally don't think you break under $7.05 per share unless you see a really bad couple of days, which is going to push the S&P down to, 400, 410, 395. Then I think you could break under 7. Then I think your ultimate low could be around $5 per share, but that does not look likely this week, and that really doesn't look likely at all, at least in my personal opinion. So hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comments section. You guys have a great rest of your day, and I will see you in the next one.